We've all heard it before. Save more, spend less. It's the go-to advice given to anyone looking to build wealth or financial security. And on the surface, it seems simple. So why does it feel so impossible to follow through? What if I told you the real reason you're not making progress with money has nothing to do with how much you save or even how much you earn? It's about something much deeper, something that impacts every financial decision you make, whether you realize it or not. Here's the thing. The financial advice you've been following isn't wrong. It's just incomplete. Most financial experts, advisors, and gurus ignore the human behavior part of money. They focus on what to do, save this percentage, invest in these assets, pay down that debt, but never really ask, why do we make the choices we do when it comes to money? What if I told you that understanding the way you behave with money could be the key to unlocking real lasting wealth? This isn't a video about budgeting hacks or stock tips. It's a video about you, how your mindset and decisions around money are, what's really holding you back. Let's dive in, because what I'm about to show you could change the way you approach money for the rest of your life. 1. The save more, spend less trap. It's a message we've all heard 1,000 times. Save more and spend less. At first glance, this seems like a no-brainer. If you make $3,000 a month and only spend $2,500, you're ahead, right? But here's where it gets tricky. What the traditional advice doesn't account for is that the more you make, the more you tend to spend. And this is where the real problem lies. The phrase we're all familiar with is lifestyle inflation. The basic idea is simple. As your income increases, your standard of living rises too. And most people, knowingly or unknowingly, spend that extra income on things that don't actually move the needle for their financial future. Take a moment to think about the last raise or promotion you got. Did you automatically upgrade your car, your apartment, or your wardrobe? The idea of you deserve it often creeps in, and before you know it, your income is swallowed by your growing lifestyle. The issue here? Lifestyle inflation is a silent killer of wealth. This is why so many people, even those earning six figures, end up living paycheck to paycheck. As your income grows, so does your sense of entitlement to a better lifestyle. But the reality is, if you don't keep your spending in check, that higher paycheck won't lead to wealth. It'll just lead to a more expensive life. So what can you do? The first step is awareness. Start tracking where your money goes. How much of that extra income is really going to assets, things that will grow your wealth over time, and how much is going toward purchases that make you feel good in the moment but won't help you in the long run? It's not about denying yourself the occasional treat, but rather being intentional with how you spend and invest your money. 2. The illusion of safe investments. Next up is the classic advice. Invest in safe assets, like bonds, and you'll be fine. For many, this sounds like good advice. We're told to steer clear of risky stocks, real estate, or crypto, and instead park our money in safe investments that offer steady returns. But what happens when we look deeper? The truth is this. When most people play it safe, they often miss out on growth opportunities that could have set them up for real wealth. But it's not about being reckless. It's about understanding the risks and the psychology behind risk aversion. Let's break it down. We're wired to avoid losses. In fact, behavioral finance shows that the pain of losing money is far greater than the pleasure of gaining it. This is known as loss aversion, and it leads many people to take the safe route by investing in low-risk, low-reward assets. But here's where the human behavior part comes in. Most people avoid risks because they're uncomfortable with them. It's not about the numbers or the data, it's about how we feel. When we think about losing money, this fear holds people back from investing in assets that could provide greater returns over time. The reality? You can't avoid risk and expect to build wealth. Instead, you need to manage it. That means understanding where the risks are and figuring out how to take calculated risks that align with your long-term goals. Pause and think. Are you avoiding certain investments because you're scared of the potential loss, or because you don't fully understand how they work? If you're playing it too safe, you might be leaving money on the table. 3. The time versus money myth. Now let's talk about something that many of us don't realize until it's too late. Time versus money. We're conditioned to think about money in terms of how much we can earn. The more you earn, the more you can save, and eventually, the more you can invest, right? But the truth is, there's another layer to this, and it's about how we spend our time. The classic equation goes like this. You exchange time for money. But what if I told you that many of us waste our time on money-saving behaviors that actually cost us more in the long run? Think about it. How much time do you spend hunting down deals, clipping coupons, or driving across town to save $5 on groceries? Sure, you're saving money, but how much of your time are you sacrificing in the process? In the long term, is that small saving really worth the time you could be spending on things that actually matter, like investing, building your skills, or networking? The truth, time is far more valuable than money. You can't get time back, and most of us are guilty of trading our most precious resource for things that don't actually move the needle on our financial future. So here's a challenge. Start thinking about money differently. Instead of focusing solely on saving a few dollars here and there, ask yourself, what could I be doing with my time that would give me a better return on investment in the future? Are there activities, hobbies, or side hustles that could generate more wealth over time than trying to save a few bucks at the store? Let's pause for a moment. Think about the last big financial decision you made. Was it driven by logic? Or were you guided by fear? Fear of losing money? Fear of missing out? Or fear of not having enough? What if the real reason most people fail to build wealth isn't because of bad advice, but because they're making decisions based on emotions instead of a well-thought-out strategy? Here's where we shift gears. You've heard the advice: save more, spend less, invest in safe assets, focus on building your wealth slowly. But what happens when we look deeper? The biggest mistake most people make is that they don't realize how their financial behavior is sabotaging their wealth. They don't recognize the role their emotions play in their financial decisions. It's not just about numbers. It's about understanding the underlying psychology of money, and that's where the real power lies. So how do you break free from the patterns holding you back? It starts with building systems that help you make better decisions, even when emotions are high. Instead of relying on willpower to make smart financial choices, set up systems that make wealth building automatic. Automate your savings and investments so you don't have to think about it. Create a financial plan that prioritizes long-term growth over short-term gains. Understand your spending habits and make intentional decisions about where you allocate your resources. And most importantly, be patient. Wealth doesn't happen overnight, and there are no shortcuts. If you've made it this far, I know this might feel like a lot to process. But here's the thing. The change you're looking for isn't about finding the next big financial trend. It's about changing how you think about money. It's about understanding the hidden psychological forces driving your decisions and taking control. If this resonated with you, I've got another video waiting for you. What feels responsible is often financially dangerous, where I go deeper into how to identify the hidden risks in your financial behavior and how to fix them before it's too late. Click on the video here and let's continue this journey together. You've got this. It's time to take control.